Trump again tries to fire Fed's cook, saying the economist's policies threaten the economy. He says the move is necessary to protect American jobs and curb inflation. The president's statement comes after months of criticism of the Fed's stance on interest rates. No official action has yet been taken, and the move faces legal and political hurdles. Despite Trump's renewed push, Fed's cook remains in his position. The Federal Reserve has not announced any steps to remove him, and the president's request has not yet triggered a formal process. The situation remains fluid, with no immediate change in leadership. The Fed's board has not yet responded publicly to the president's claim. The president's attempt to remove Fed's cook faces legal and political hurdles. Congress could block the move, and courts may intervene if the action violates the Constitution. The uncertainty over the outcome highlights the tension between the executive branch and the independent central bank. The situation remains unresolved, with no clear path forward for either side. Dollar fell 0.5% on Tuesday after the U.S. Labor Department released weaker than expected jobs data, pushing investors to rethink the Federal Reserve's next rate hike. The drop came as the market priced in a lower probability of a rate increase this year. The weaker dollar signals that traders expect the Fed to keep rates lower for longer, affecting import costs in global markets. The dollar's decline has shifted market expectations, reducing the likelihood of a Fed rate hike this year. Investors now see a higher chance that the Federal Reserve will keep rates steady or cut them, which could lower borrowing costs for consumers and businesses. This shift may influence import prices, trade balances, and the broader financial markets worldwide. Currency movements are volatile, and the impact on the broader economy depends on subsequent Fed actions and global economic conditions. While the dollar's recent drop reflects lower expectations for rate hikes, it is unclear how long this trend will last or how it will affect import prices and trade balances. Investors remain cautious as the Fed's future policy path is still uncertain. U.S. officials says a deal between Iran and Oman on the Strait of Hormuz is expected soon. The agreement could stabilize a critical maritime choke point, influencing global oil supply and regional security dynamics. The deal's terms and implementation remain unconfirmed. Geopolitical tensions could still disrupt the Strait of Hormuz. The terms of the expected Iran-Oman deal on the Strait of Hormuz are not yet confirmed, and geopolitical tensions could still disrupt the passage. While the agreement could stabilize the choke point, its implementation details are still unknown, leaving uncertainty about its impact on global oil supply and regional security.